At my age, people stop asking how my day is going and start asking a different question. What's the one thing you want to leave behind? If you strip away all the magazine covers, all the shareholder meetings, all the noise, my answer is simple. I don't want my last piece of advice to be a stock tip. I want it to be a way of thinking, a way of deciding what to own, how long to own it, and how to make sure it keeps taking care of the people you love long after you're gone. You've heard the line 1,000 times, our favorite holding period is forever. It's been quoted so much, it's almost turned into wallpaper. Most people think it means never sell anything. That's wrong. What it really means is only buy things you'd be happy to own without a stock market, without a quote, without a trading app, just you and the cash the asset throws off year after year. So let me give you what you can think of as my last will investment strategy. It's not complicated. It fits on an index card. And if you understand it, you'll never again feel the need to ask, what should I buy this week? The whole strategy is a two-part filter. You can apply it to any investment stocks, private businesses, real estate, farms, even an index fund. If it passes both parts, it belongs in what I'll call your perpetual wealth engine. If it fails, you have no business calling it a forever asset. Here's the first part. The business test, would I be comfortable owning this business if the stock market closed for the next 10 years? Imagine you wake up tomorrow and there are no quotes, no tickers, no CNBC, no apps. You still own whatever you own, but the only information you get is the cash the asset actually sends you and the occasional report on its operations. Would you still want to own it? Years ago, we bought See's Candies for about $25 million. Over time, with a bit more investment, that business went on to generate roughly $2 billion in pre-tax profits for Berkshire. The magic wasn't that we could trade the stock every day. The magic was simple. Customers loved the product. They came back every holiday, year after year. We could raise prices a little above inflation because people cared more about the brand than the pennies. The business didn't require huge new capital every year to keep going. If the stock market had been closed the whole time, See's would still have been a dream investment. It just mailed us money again and again. The same is true of Coca-Cola. We bought it in the late 1980s. People were already drinking it when my grandfather was alive. They're still drinking it today. The brand, the distribution system, the global habit, that's the moat. In any given year, the stock might be up or down 30%. But the business, it sells billions of servings at a small profit each, almost regardless of the headlines. That's what forever looks like in practice. You don't need the market to agree with you every day. You need a business that keeps doing its job quietly, reliably, compounding its value in the background. So when you look at an investment, ask yourself slowly, if they turned off the stock exchange for a decade, would I still be happy I own this? Does it sell something simple, repeatable, and wanted year after year? Can it raise prices a bit over time without driving customers away? If the honest answer is no, it doesn't belong in a last will strategy. It might be a trade, a speculation, a fling. It is not a perpetual engine. Now, the second part of the Heir Test is this asset so simple and durable that I could explain it in my will to a non-financial heir, and they could manage it without ever having to sell. In my own will, the instructions for my wife are almost embarrassingly simple. I've said publicly, I've told the trustee to put 10% of the cash in short-term government bonds and 90% in a very low-cost S&P 500 index fund. That's it. No cleverness, no stock eye picking, no phones ringing at 3 a.m. Why? Because I want a strategy that a smart, non-professional person can follow without anxiety for the next 30, 40 years. Something you can write in a will and trust that the people you love will not have to make 500 decisions to keep it working. When you apply the Heir Test, ask yourself, could I explain this in 1 or 2 paragraphs to someone who doesn't like finance? If I died tomorrow, would they have to scramble, sell everything, and find an expert just to keep it from blowing up? Does this asset basically take care of itself as long as they don't do anything foolish? A good last will asset is one where your heir can essentially do 3 things. Hold it, occasionally raise prices or reinvest, and ignore the noise. Now combine those 2 tests, business test and Heir Test, and you get what I call your perpetual wealth engine. It's not one ticker. It's a short list of types of assets that make sense to own almost indefinitely. Let me give you a few of them. First, the local monopoly. Think of your regional electric utility, the water system, the only railroad into a certain area, or a dominant waste tea collection business. If they turned that business off tomorrow, everyone would notice. It has a built-in need, often some regulatory protection, and very high switching costs. It's usually boring. That's a good sign. A local monopoly passes the business test because people must keep using it. It passes the Heir Test because you can explain it in one sentence. This company provides power and sends you a check 4 times a year. Second, the toll bridge. Here, I'll stretch the metaphor a little. A toll bridge business is any business where you build the asset once and then collect small payments every time someone wants to cross. It might be a real toll road or bridge. It might be a payments network, a key software platform, or a stock index fund that owns slices of hundreds of businesses and takes a tiny fee. In an inflationary world, I once said, an unregulated toll bridge is a wonderful thing. You lay out the cost in old dollars, and then, as the value of money changes, you raise the toll. The asset doesn't wear out rapidly, and people keep crossing. For a normal investor, the purest toll bridge is often the broad index fund. It's a claim on the earnings of hundreds of companies at once, managed for a microscopic fee. It passes the business test because the underlying companies are real businesses with profits. It passes the Heir Test because the instructions are so simple. Own this fund, add to it over time. Don't touch it. Third, the infinite product. By that I mean a branded consumer goods company whose product people buy over and over again, almost without thinking. Think of a candy brand like See's. Think of a beverage like Coca-Cola. The product is simple. The habit is deep. The economics are beautiful. You don't have to persuade the world from scratch every year. You just have to keep the quality high and adjust the price sensibly. When See's raised prices year after year, customers stayed. Volume barely needed to grow. Pricing and loyalty did the heavy lifting. That's an engine. You could add others to the list. A great insurer with durable underwriting culture. A landlord with irreplaceable locations. But the pattern is the same. The business earns good returns, needs modest reinvestment, has a moat, and can be understood, and held by someone who doesn't wake up wanting to read tens. Now, here's the final instruction, and it's the part most people don't like to hear. Stop searching for the next hot stock. Stop thinking there is some magic list of secrets I've been keeping from you that will suddenly make it easy. There isn't. Find one asset, just one to start, that passes both tests. You'd be happy to own it if the market closed for 10 years. You'd be comfortable leaving it in your will to someone you love. With simple instructions, then buy it. Size it sensibly. And from that day on, understand that your main job is not to outsmart everyone else. It's to protect that engine, protect it from your own impatience. Protect it from people who want you to trade it away. Protect it from fees, from leverage, from fads, from the urge to be clever. At 94, I can tell you, the real relief in investing doesn't come from knowing what will happen next quarter. It comes from waking up and knowing that even if the quotes vanished, even if the headlines screamed, your assets would quietly keep doing their work. That is the last investment I'd ever tell you to make. Not a name, but a way of choosing. Find a perpetual engine, make sure it can outlive you. Then let time do what time does best.